Good morning, everyone. Thanks, panelists, for being here. My name is Jim McIlree. I'm an equity analyst with Chardan Capital Markets. I follow the crypto space, among other things, and Chardan is a privately held full-service investment bank based in New York. We are devoting substantial resources to the crypto market, specifically Hyperliquid, and thank you for having me today. Our four panelists are going to introduce themselves. Matt, why don't you start?
Sure, absolutely. Excited to be here. I'm Matt Hogan. I'm the Chief Investment Officer at Bitwise Asset Management. Bitwise, if you don't know, is a global crypto asset manager. We've been in the market for almost 9 years now, manage something like $12 billion across ETFs, SMAs, vaults, staking, and other strategies.
Hey everybody, Zach Pandal, oversee research at Grayscale. You probably know us as well. We're the largest crypto-dedicated fund manager in the world, and we run a Hyperliquid ETF, ticker HYPG.
Hey everyone, my name is Hyunsu Jung. I'm the CEO of Hyperion DeFi, first public company to develop a Hyperliquid-based strategy. We've developed several unique products and services on the Hyperliquid ecosystem, and really excited to be here and discuss the topics today.
And I'm David Seamus, CEO of Hyperliquid Strategies, also a digital asset treasury for Hyperliquid. And I have to say, one way to clear a room is to do a panel on DATs and ETFs. But hopefully we'll make it interesting.
Thanks, everyone. Why don't we start with what problems you're solving for investors? That is, for an investor looking to get exposure to Hype, the token, or the ecosystem, what is it that your product solves versus the alternatives? Matt, why don't you start?
Sure, yeah. We launched a Hyperliquid ETF, BHype. We're very excited about it. It makes it easy for investors to gain exposure to everything exciting in Hyperliquid in a traditional brokerage account with a regulated product that stakes, that's audited, that has reporting. Much of the world's money can only access regulated products, and spot crypto ETFs make that easy, and they do it reliably at a low fee. So that's what we've done with BHype.
Happy to build on that. Matt and I offer similar products, and so I think the easiness is key. But what I would maybe add is that Hyperliquid and the Hype token are in a different category than so many other things in crypto. When we're pitching Bitcoin, for example, it's very often to a diversified allocator looking for dollar debasement hedge. The Hype token is being looked at by, say, fintech pods at hedge funds. That's often who's very interested in our product. And tokens are a hassle for them. They typically invest in stocks, but they want to buy the Hype token. They want to get exposure to this particular fintech story. So their options really are futures and ETFs. So the reason that the ETF is valuable is it gives you exposure, very straightforward, direct exposure to the Hype token, but it can traffic anywhere that an investment manager's other assets will go, the typical equity exposure. So we're making life easy for anybody to get access to the Hype token, including things like a fintech pod at a hedge fund, which is some of where the interest is coming from these days for the Hype token.
So for Hyperion DeFi, or HypeD, HYPD on NASDAQ, we are obviously at the base level provide exposure to Hype. Most of our balance sheet is denominated in Hype. We have over 2 million Hype on the balance sheet. But having been in the space, crypto, for a long time, we know that there's more to each ecosystem than just the base asset. There's an entire ecosystem building on Hyperliquid. So over the past year or so, we've developed various products and services that provide comprehensive but simplified exposure to what we believe are all the best things in the Hyperliquid ecosystem. So that includes validator operations, HIP3, perpetuals markets, lending, borrowing primitives, vault yield primitives, as well as private trading and RFQ infrastructure across Hypercore and HyperEVM. And so for most investors, it's challenging to get access to all of that in a way that is very comprehensive and robust. And that's what we look to solve for through the public equity vehicle of Hyperion.
Yeah, I would say, the answer to this question changes a bit over time. A year ago, there was really no way to get Hype exposure other than directly with the token. Now, obviously, we're all talking about different ways to do it. And I think that ETFs are obviously a fairly straightforward thing. As a DAT, we have to sort of keep reinventing ourselves. and be able to figure out ways to do more than just hold the token, or at the very least, make the idea of holding the token, make the idea of holding our stock at least as good, if not better, than holding the token for a potential investor. And I think that at Hyperliquid Strategies, we own something like 29 and change million tokens right now. It's hard to imagine for the foreseeable future that is not the vast majority of our value, in owning our stock. On the other hand, we are working hard to come up with more ways to add value for a shareholder beyond just the underlying value of the tokens. And I think that's the trick. And I think over the long term, and I know long term means different in the crypto world than it means in the real world, but over the long term, I think the DATs that are successful, the DATs that will one day be more than just DATs, are the ones that are able to figure out more to do than just holding the token.
So David and Hyunsu, you both talked about doing something more than just holding the token. Is that in response to the ETFs that your colleagues here have just started, or is that driven by investor demand? Or can you talk about how what you're doing might be competing for the same investment dollars as the ETFs?
I guess I'll start by saying that, in previous panels, we talked about the markets, the total addressable markets, the amount of volume, liquidity, perpetuals, and financial instruments. There's an entire pie that is still growing substantially. So when we talk about investors that are even aware of Hyperliquid, there's not a very large amount as far as we're aware, and we're speaking to all these institutions. When it comes to Hyperion DeFi, my background personally, I've been working in the Ethereum ecosystem prior to the merge. So we were the first institution to deploy over $1 billion of ETH following Ethereum's move to the proof of stake. So we know how to deploy capital on-chain and run validator operations. And more importantly, I deployed $300 million worth of Filecoin into the data center space from 2021 to 2024. And that was all about using the utility of the underlying token to generate outsized returns. When Hype TGE'd and they announced the assistance fund with the buyback mechanism, and then they shortly announced HIP3, where anyone with 500,000 Hype could basically build a perpetuals market on Hyperliquid's infrastructure, there was a very clear opportunity to not only hold what would become the best and most robust digital asset, in our opinion, and also build a business around it. So Hyperion DeFi, we call ourselves a DeFi company because we are here to build businesses on-chain that are uniquely differentiated, highly scalable, and very cost-efficient, and can scale at a rate that is not really possible in other vehicles. And so we don't view it as a competitive landscape between ETFs and other providers. There is obviously a finite supply of Hype, which is very meaningful, but we want to focus so much on building and differentiating ourselves amongst any other company and across any other blockchain.
Yeah, I would say, Jim, to answer your question, if we lived in a world where we were the only DAT and there were no ETFs and we always traded at a high MNAV, that would be a great way to, maybe I'd start playing golf, because that sounds like a great way to make a living, and it sounds really easy, but it's not real life, right? In real life, there is competition, and successful companies are the ones that are able to respond to that competition in thoughtful ways. And we are definitely trying to do that. I think that we obviously have a very volatile underlying here. Hype, love it or hate it, it's got a fair amount of volatility, way more than Bitcoin or Ethereum. And then what we've also found is our MNAV is also quite volatile over the number of months since we've been doing this. I think a month and a half or 2 months ago, our MNAV was about 1.3x. And today it's hovering around 0.9 or 0.95x. I mean, that is, huge volatility to add on top of an already volatile underlying. And I think that, when you look at other DATs, and obviously the, MicroStrategy and Michael Saylor is sort of the poster child. You have to either be creative on the asset side or be creative on the liability side. And I think so far, all MicroStrategy has done is really try to be creative on the right side of the balance sheet. And I am not a huge fan of that, to tell you the truth. I think that it's clearly they've painted themselves into a bit of a corner by being overly creative on the right side of their balance sheet. So I think we are trying to figure out if we can be creative on the left side of the balance sheet. And look, I think when we were trading at 1.3x, you had to really, sit here and hear me say this and believe it and get excited about it. At 0.9 or 0.95, you could hear everything I say and say, yeah, there's I give that guy a 5% chance of success, but it's still at 0.9, like, you're not paying a lot for that call option. So to me, it's a much easier discussion to have.
Go ahead.
I'd love to jump in on this, maybe just to bring some life to a panel, to debate some of these things. Look, my view is absolutely all of these products are competing for investor capital that is interested in Hyperliquid. And I would like to make the case that our ETF is really the obvious choice. When you're thinking about investing in Hyperliquid, there's lots of questions that you need to answer for yourself. How is perp crypto competition going to evolve? What is the regulatory picture? How much fee revenue can they generate out of this platform? And I think it's a very compelling investment thesis. There's lots of questions I already need to answer for myself. I just want the Hype token. When you bring in the digital asset treasury element, it's possible that you could outperform the token, but a lot more uncertainty, and I would think a much lower Sharpe ratio. And I think that the MicroStrategy story exactly plays that out. Michael Saylor has outperformed Bitcoin since they introduced the Bitcoin treasury strategy, and that is a really remarkable feat. Almost nothing has outperformed Bitcoin since August of 2020 when they launched that strategy. But the journey that he has taken his investors on has really been a huge roller coaster, and it's much lower Sharpe ratio than just owning the token. So I love the Hyperliquid investment thesis. My view would be investors should just buy Hype, and the ETF is just a very simple structure to get exposure to that idea. I think these gentlemen are very sophisticated, and maybe they can outperform the Hype token, but whether it's a better Sharpe ratio, I'm less sure. So I think the ETFs really are the right way to begin approaching this ecosystem.
If you'd like.
Sure. I mean, I think that's I approximately agree with that. If all a digital asset treasury company does is buy and hold the token, then Zach and I can do it better, because you can get in and out at or near NAV every single day, and we can do it at extraordinarily low costs. They have to do more than that. It's a little bit like active versus index exposure in a traditional equity fund. Most active strategies underperform and some outperform, and you need to find the ones that are greater. The ETF is sort of the base layer, base exposure, and then the treasury companies have a hard but not impossible challenge to outperform that through doing hard work. And I think some of them do succeed at that, and then some of them don't. But again, they can't just do what an ETF does. That's not enough. They have to do more. And I think different investors will make the right choice. I'm actually maybe a little bit more optimistic than Zach is on the digital asset treasury space. I think high quality operators can execute well over long periods of time, and people with long duration of investment may find that attractive. And people who just want the exposure should buy the ETF because it does it nearly perfectly.
And Hyunsu and David, to respond to that a little bit, do you think that, given what Matt and Zach have just said, that you need to scale quickly in the investment side of your business versus just the buy and hold of the token? Hyunsu, you've been the most aggressive in terms of investing in the ecosystem. Is there a limit or a line that you need to cross in order to attract investors to HYPD versus an ETF? And that line would be how much you've invested in the ecosystem itself.
A lot there. To start, I would say that we've personally have built in ecosystems before. And so we know what this process is like, and the Hyper EVM is very overlooked, underappreciated, but it's got the very unique core writer capability, which means that it will write directly to Hypercore. And we heard the team talk earlier, the core team, about the value of having a unified blockchain that serves finance and also DeFi primitives, stablecoins, and so forth. For us, it was positioning was we are not investing our capital into anything but buying Hype and deploying that Hype the most proficiently across any other entity in any other ecosystem. The Hype D also provides exposure to 1% of HPL or Hyperlend. We have risk points. We have 0.2% of Kinetic, or KNTQ, which is the leading liquid staking protocol on Hyperliquid. And we have 1% of equity in Silhouette. And just yesterday, we are returning to HIP3 with Skew Technologies. And we also have equity and revenue share exposure across all of those 5 different protocols and partners. We didn't have to invest a single dollar into those deals. What we are doing is we are finding new ways to leverage Hype to not only build revenue-generating businesses, but also build what we call embedded call options, or things that can multiply substantially if Hyperliquid more broadly succeeds as we expect it to over the coming years. And so it's going to take time, and we've seen what happens with a lot of crypto projects where nothing's happening. Well, it looks like nothing's happening, but we're working really hard, and we think there's a very asymmetric opportunity specific to Hype-D because of what we're building. So that's what we think about the most.
Yeah, I would just say, I think the acronym's bad. I think the acronym DAT was born of an era when MicroStrategy could just buy Bitcoin and stick it in a treasury and do nothing with it and get rewarded for that. Like now, if you were making the acronym, you wouldn't call them treasury companies. You'd call them digital asset ecosystem plays or something like that. That doesn't roll off the tongue. But I think that the idea that these things just buy the asset and stick it in a vault, obviously that's not as good as an ETF. They have to buy the asset and then do interesting things with it. And if they do that well, then they'll be rewarded. And if they do it poorly, then they'll get crushed.
Yeah, I would say that to address your question, which is, do you have to do this quickly? I would say I've been investing in financial services now for 26 years, which probably longer than some people in this room have been alive. And I would say that, frankly, there's nothing scarier than the thought of giving someone a pile of capital and saying to them, you need to invest this really quickly. That is not generally a formula for success. And I think that if you give someone a pile of capital and strongly incentivize them to get it invested very quickly, they will get it invested very quickly. It doesn't mean you'll be happy with the returns on the back end. So no, we are not trying to win a race or do this fast. We're trying to do it well.
One of the commonalities between, or for all of you, is that you stake your assets, you stake the Hype. But the ETFs face a limit because of liquidity. Is that correct? How do Matt and Zach, how do you handle that liquidity constraint in staking?
Yeah, basically all the ETFs are different because all the protocols are different. Solana is very simple. Ethereum is somewhat complicated, and Hyperliquid is in between. And we need to, fortunately, there's lots of experience in other ETF products. So with this type of thing, things with settlement times that are longer than the daily liquidity of the product. And so we maintain a liquidity buffer. We don't stake 100% of the assets, and we have third-party credit agreements to get that staking share as high as possible. So as Matt said, there's an element of active management in this piece as well, kind of maximizing the stake ratio and the staking returns for the product while managing the needs of a daily liquidity fund. So not that complicated in the case of Hyperliquid, but it does care some thought and care to make sure we're giving the maximum return for investors while maintaining the ability to give liquidity every day.
The DATs, however, can stake 100% of their tokens, so that is a modest advantage, I would.
I think that's a fair point, and I think one of my theses about the industry is actually we will see plenty of demand for non-ETF, non-daily liquidity products, whether that's interval funds or GPLP kind of hedge fund structures for staked assets, because staking does reduce the liquidity of assets, and I do think that that does something that speaks for closed vehicles like the DATs.
They also run validators, so if you need a validator to stake with.
Yeah, Bitwise is also one of the largest staking providers in the space as well. But I think you're right. You can think of the variance around MNAV as a cost for the benefit of not having to deal with things like daily liquidity. I think that's a fair way to conceptualize the trade-off.
And David and Hyunsu,
that's not a very good trade, though, from the standpoint of Sharpe ratio. I mean, the vol of these of MNAV of the valuation multiple to the difference in the staking yield is, in my view, not the right trade-off. But I agree with the point.
I agree with that. I just meant conceptually there is nothing free in finance, right? So that is that example. But yeah, the ETFs are able to stake a huge percentage of their assets, and if you do it well over time, that's beneficial to investors. Of course, it's not the primary driver of returns, right? You're talking about 1% or 2% a year. on an asset that can move, 100% in a year. It's a piece. It's an important piece. You have to do it well, but it's just a piece.
Yeah, look, I would say the staking issue, look, the cost of running any of these things is something. There's a positive cost for all of us to run these things. For an ETF, one part of the cost is that you can't stake 100%. And I'm not sure exactly what percent you guys are at now, but it's obviously something below 100. I think the max is like 75, right? But you're not quite at 75. I don't know, but the point is you can't stake 100%. That's part of the cost. Then I think there's also additional fees on staking revenue. For a DAT, you can stake 100%, which we do. We have operating costs. We have employees, we have boards, we have insurance, we have things like that. And look, we are working really hard to keep those operating costs as low as possible. When we closed in early December, we had something like a $500 million market cap, give or take, and we had 4 employees. And today, we're up to something like a $1.8 billion market cap, give or take, and we have 4 employees. It's the same 4 employees, and we're all more or less making the same amount of money. So, there's an opportunity to grow the size of the thing and the market cap without growing that underlying expense base. So effectively, the expenses as a percentage of the total goes down as the total goes up, and that's part of the thing. The other thing about MNAV, obviously when you're calculating Sharpe ratios, other things, and you're looking at your returns on a daily basis, MNAV volatility can obviously make you crazy, but the MNAV volatility is also an opportunity in the DAT business, right? When we were at 1.2 and 1.3x, which wasn't very long ago, we were issuing stock, buying more tokens, and that was an NAV accretive thing. Back in December, when we were at 0.8 or lower MNAV, we were using our cash to buy back our stock, and that's also an NAV accretive thing. So we're able to sort of accrete NAV on both sides, which we have done. So again, like if you're super worried about day-to-day volatility, the ETF might be the better choice. I don't know, investors should make their own choices. That's the nice thing about markets. But in the long term, we think, MNAV volatility is not only a cost, it's also an opportunity. And we have definitely taken advantage of that opportunity on both sides. In a relatively short period of time, we have both issued stock at a premium and bought back stock at a discount.
Yeah, I would say it's a great mechanism that allows for scale. And when it's more challenging in a market like today's, then you have to obviously take the assets that you have on the balance sheet and utilize them well. It's funny to talk about staking and what percentage of staking, when in reality, staking across all ecosystems should be table stakes, right? Ethereum, Solana, XRP, whatever, everyone should be staking their assets to support the security and sustainability of the blockchain. But again, Hype has very unique utility. So for us, we think more about what can we do after staking? What markets can we help deploy? How can we help reduce trading fees for counterparties to trade more volume on Hyperliquid? How can we actually enable that the markets become more liquid? How can we support a liquid staking protocol like Kinetic and take a liquid LST and then use that in Hyperion DeFi to then increase revenues there, increase more velocity of capital? There's just so much more that can be done on a network like Hyperliquid, and our focus is, again, so much far beyond staking, and obviously that comes down to proper execution, but that's what the team is here to do.
Are the ETFs at a disadvantage in terms of the cost and scaling? So David talked about as he scaled, the employee count didn't change, and so presumably his expense ratio would decline. But is your expense ratio, the ones that investors face, that's relatively constant, isn't it?
It's low, and ETF expense ratios can decline as assets scale. That's what the history of the industry suggests to you. I mean, they're among the most efficient investments vehicles in the world. You know that because you can buy the same ETF that the Harvard Endowment buys. They are able to access any way of approaching the crypto markets they choose to access through an ETF. The Abu Dhabi Sovereign Wealth Fund can choose any way to approach the crypto markets. They choose to access it through the ETF. The reason for that is that the fees on ETFs are just incredibly low. It's one of the most efficient financial infrastructures ever developed. So to answer your question, fees are fixed but can decline over time as the assets scale. But generally, ETF fees are just extraordinarily low across all different major crypto asset ETFs.
And do you all think that there's a capacity or a limit to how much you can own? David, you own close to 30 million Hype?
29 and change, yeah.
Well, we'll round to 30. And I think the rest of you each own about 2 million. Is that correct? Give or take?
About 130 million USD.
Yeah,
How many Hype that
that'd
is?
be about 2 million.
Yep.
Yeah.
In that vicinity.
So as you scale, and David, as let's presume that you continue to scale, one of the interesting things about the Hyperliquid token is there's a buyback mechanism, so that reduces over time. So as you guys scale and the token declines, is there a limit? Is there a natural limit to how big this industry on the panel can get?
I mean, look, I think the only theoretical natural limit is 100 among everybody. And no seriousness, I don't think there's any natural occurring number below 100 that is actually a limit here, although there's a practical reality that we're not going to get to 100, obviously. There are plenty of people that are still perfectly happy holding their Hype in Hype token form. But I think the practical answer is no. There's no like obvious number that we can't get above. But I'm not necessarily holding my breath either. I think we're all making arguments as to why holding Hype in our various forms is better than doing it direct. And again, markets like having choices. Some people in the room will say that makes perfect sense to them, and some will say these guys are nuts, and that's okay, and that's what markets are for.
I mean, they're absolutely way too small right now. Hyperliquid ETFs are like $150 million. They should be at maturity, as big as Hype's circulating market cap. I think price takes care of this question of scale. So I think the ETFs, I think both of our ETFs someday will be $10 billion plus products when you're talking about Hype at a mature scale at a much larger market cap. So there's plenty of capacity, I think.
Yeah, I'll just add, I think we haven't found the ceiling in any of the product. The Bitcoin ETFs, the ETH ETFs, I don't think we found the ceiling of what absorption they can have of the total token. And maybe just to try to emphasize to people like how obvious this structure is for so many different types of investors. People do not want to go track down liquidity for tokens or custody or deal with their staking themselves or think about taxes in an additional way or think about estate planning or whatever it may be. And the ETFs are just a very simple package. And I think you will see quite a high share of total token market cap in general across the industry continue to flow to the ETFs.
Yeah, I was trying to get at the incremental buyer of the Hype token, and clearly the ETFs are one of those incremental buyers, and both of you are indicating that you're still at very low levels of ownership, and so there's a tremendous opportunity to grow and to continue to be that incremental buyer of the token. It was a convoluted way to get at that question, but that's what I was trying to say.
Yeah, I mean, I think that's a really good point. I go and give talks at Morgan Stanley conferences, at Charles Schwab, at the largest conferences in the world. Most of those people, 99% of the people in the room, literally haven't heard of Hyperliquid. The last panel talked about speaking with the largest bank in Africa, and they hadn't heard of perpetual futures. It's hard when you're in this ecosystem to imagine. We tell ourselves these grand stories about how Hyperliquid became the center of the global oil trade. We assume 100% of people know that story from the start of the Iran war. Less than 1% of the people know that story within finance. I think we're minusculely penetrated into people's mind share. They still dismiss Hype as a crypto-specific app. They don't understand the market it's going after. I think it's extraordinarily early.
Hyunsu, what developments in the Hyperliquid ecosystem do you hope to see over the next years to make HypeD more valuable to investors?
Yeah, so as I mentioned earlier, we announced yesterday that Hyperion DeFi is returning to HIP3. We're working with Skew Technologies to help them deploy more bespoke markets, but we are also rolling out what we're tentatively calling partner markets or institutional listing service. So because of our role in HIP3 and being the first public company to list via HIP3, we received so much inbound over the past several months from teams globally that want to list and distribute these markets via their own front ends or finding ways to basically get listed on an exchange, right? We think about it in that kind of model. And so there was an opportunity for us to create a service product, fixed and revenue share based, that's very scalable, using one allocation of 500,000 hype. And so that's a model that we are really excited about, and we hope to put out some more announcements in the coming months. And then obviously HIP4. If you look at Kalshi's numbers since the World Cup started, absolutely parabolic. And I think there was a really incredible opportunity for Hyperliquid. Obviously, it's not permissionless yet, but we think that it is in the timeline. That is guidance that they provided. So we plan to be involved in HIP4, and so you kind of now cover perpetuals, outcome markets. There's synergies between those tokenized assets on Hyper EVM, which we're also covering the basis of. And so we are very much focused on building an infrastructure layer geared towards servicing all of those products and services.
Zach, is there something that you hope to see the ecosystem develop that would be beneficial to your product?
I think it has great momentum. I think what stands out to me is that how much success you're seeing today in the depths of a crypto bear market. And if you look at Hyperliquid fee revenue, for example, it is very difficult to see a 50% drop in the price of Bitcoin. So I think just continuing on this path and the crypto market cycle and some of these other things will take care of themselves. The regulatory clarity piece will continue to be a tailwind for the ecosystem. I think all the right pieces are in place today, and you just need to see the story play out. So we're quite happy with the team's execution and the third-party builder momentum at the moment.
And Matt, what do you think, is there a misconception investors have about your product that you can address?
On the ETF front, I'm not sure that there is. I think the biggest one is just not knowing that it exists. I think it's more an education process than a misconception. ETFs do what they say on the tin. They buy, hold, stake, hype, and they do it exceptionally well at low cost. So I think people do recognize it. That's why we've had inflows almost every day since we launched. It's been an extraordinary response. So I think maybe it's just education and getting the message out.
And so how do you go about doing that? What is your education and messaging strategy?
Bitwise has a 25-person distribution team. We do 15,000 meetings a year with financial professionals. All of those meetings, or many of those meetings, will discuss Hyperliquid. So it's really just a matter of time and continuing to press on it. Again, I think we're so early in the broader traditional financial ecosystem's understanding of Hyperliquid. We just have to keep at it over time. But it's on the right trajectory. I think it's really set up for success.
I think we just have time for one more question. So David, we'll start with you, and then we'll come down the panel. But what are you looking to contribute to the Hyperliquid ecosystem? Or alternatively, 3 years ahead, how do you determine if your product has been successful? The stock price is obviously one of them, but what would be the driver of that stock price?
Look, I think one thing we have, we obviously have a lot of capital. We have a lot of cash. We've made we made a decision to keep a lot of cash on the balance. We've actually increased our cash over the last few months, about 150 million right now of cash. We have a pretty credible TradFi board. I think from the beginning we decided that we didn't want this to sort of be a bunch of sort of crypto bros, which, by the way, I say that as a compliment, but we wanted this to have a sort of a look and feel of TradFi. And I think there's just so many paths where the connectivity between Hyperliquid and TradFi. It's come up here. We've talked about going to see Morgan Stanley or whatever, and 99% of the people don't know about Hyperliquid. I think it's areas like that and connecting it to TradFi, because in the end, like NVIDIA's market cap is much bigger than all of crypto combined. And, unless and until Hyperliquid really, breaks into TradFi in a big way, it's not going to have the sort of exponential growth we're all hoping for. So I think that is an absolute necessity.
Hyunsu, I think you're going to have the last word on this one.
Pretty simple. Buy more hype, scale our revenue-generating business lines, help build the ecosystem, and make sure Hyperliquid becomes one of the most, if not the most dominant blockchain.
Well, I think we are just about out of time. Matt and Zach, sorry about that. But thank you, everyone, and thank you all for listening.